This is absolutely beautiful. As an investor, waking up in the morning, seeing a sea of red, bloody candles is exactly what I hope and pray for, not these green candles that are giving me these gains. And in today's video, I'm going to explain to you why that's the case and why you should be adapting this exact mindset to change your own psychology on why you should be praying for red candles and not be hoping for these green candles. So in today's video, without further ado, let me get started on why I'm not some insane pessimist and want red candles. So firstly, I'm going to give you a simple analogy out the gate. So when you walk into the grocery store, now let's just pretend for a second, hopefully you like steak. If you don't eat steak, that's okay. Just imagine your favorite food that you always cook and eat for yourself. Now imagine you walk into the grocery store and the first thing you see is a giant red sign that says super sale, 50 to 60% off. Now, when you see this, you went to the grocery store specifically to buy these steaks. What's the first thing you're going to do? You're going to immediately jump for joy and buy as many of these as possible. You might even stock up on it. Now, what you're not going to do is you're not going to look at the sign and start screaming and being like, oh shit, steaks are going to zero. This is awful. I need to get out of here ASAP. I'm not going to buy these steaks. This is terrible. Now, of course, when I'm talking about food and steak, that sounds absolutely ludicrous. And you might say that there's no correlation with that at all. But there actually is a very strong correlation between buying a steak or a piece of grocery or clothing compared to buying or investing. And I want you to start adapting this mindset of your portfolio being like a grocery store or a clothing store, that when the price crashes, the quality of the asset hasn't changed at all. It's just the price tag has changed and has actually gifted you a better opportunity so that you can reap the rewards long term, just buying at a better entry price. So I'm going to break this down even more because there's two important things that you need to adapt to actually get this mindset of wanting these red candles and being able to buy in periods like this and not panic. Because, of course, it sounds easier said than done. Everyone in retrospect has looked at their favorite asset and their favorite chart and said, oh, look, if only I bought down here, or if I bought down here, I should have bought so much over here. Why didn't I do that? And then when that actually occurs, you don't end up buying anything, or you might even sell, or you just do nothing. You don't actually capitalize on the situation as if it was a steak that was on sale, and then you're going to capitalize on that. So, anyways, I digress further into this. So, the two main things that I want you to focus on going forward to adapt this specific mentality to love situations like this is something called conviction and low time preference. So, I'm going to break this down briefly on what I mean by both of these words. And the first conviction is conviction investing is an investment strategy where a manager or investor holds a strong research backed belief in a select few assets, allowing them to take concentrated larger bets on those holdings for potentially higher returns, differing from diversified investing by focusing on depth of knowledge over breadth. It involves significant confidence in the investment's long term potential, leading to holding positions through volatility because of deep understanding and belief in the underlying value rather than fear or herd mentality. And what this is essentially saying, and why I'm saying you want to adapt a conviction mindset, is for very two big specific reasons. It is strong belief and deep research. And the reason I say this is because deep research is what actually creates the strong conviction and the strong belief, which allows you to adapt this mindset of choosing belief over fear of missing out and holding steady while others sell. Because the reality is, in order to adapt conviction and be able to have confidence when an asset is dropping rapidly like this, you need to have put in the research and the understanding of what you're actually investing in. Or else, when a situation like this occurs, that is when panic is going to withhold you and you are going to eventually just sell or do nothing because you don't have any understanding or a deep conviction in what you're actually buying. Now, on the flip side of it, if you develop that strong conviction and you understand what you're buying, just like how you're understanding a steak that is 50, 60% off is going to taste amazing in your mouth, it's going to be the same thing. When you start seeing things drop 50, 60%, you're thinking this is going to be amazing for my portfolio. Now, this flows in perfectly with the second part that I want to keep in mind for you to develop this actual psychological mindset. And that is called low time preference. So, low time preference is something that might be just as valuable or more valuable as conviction, but having both together, adapting this mindset, can really make you into a successful investor in the long term. And what low time preference means is valuing future rewards more than immediate gratification, leading individuals to delay pleasure, save money, invest in long term projects, and plan proactively for a better future rather than reactively satisfying present wants. It's about making sacrifices now for greater long term benefits, contrasting with high time preference, which favors instant rewards. And what this is essentially saying is basically having a long term investing outlook. And what that means is basically delaying gratification and waiting for your investment to actually receive these gains rather than having a more of an instant gratification mindset of wanting returns immediately. Because the reality is, as much as everyone, including myself, love to do technical analysis, the reality is no one actually truly knows what's going to happen to an asset or to the economy in the short term. But things that we can do is make calculated bets and calculated risk taking on certain assets that over a long enough time period, we can reap the rewards that the asset can give. And that is what low time preference is essentially saying. It's basically saying that you need to have a long term time horizon where if you have a strong conviction and you understand what you're buying, coupled with a low time preference, you will more than likely succeed because not only do you have confidence in what you're investing because you did the deep research, but you're also willing to withstand through the crashes. Because at the end of every crash, when having conviction in a truly good asset, you will see the rewards will be reaped and it will go even higher. And this is exactly the two things that you need to adapt in your own investing journey. Developing conviction and developing a low time preference is the perfect formula for you to actually be a successful investor and not be a gambler just buying something that your friend or your favorite YouTuber recommended and then you begin panicking and you don't feel well when the markets start crashing. Because once you start developing conviction and low time preference in your favorite asset, once you start seeing these red candles, you're going to be jumping for joy because you're going to view it exactly like a steak that is on sale. So, without further ado, I'm going to digress a little bit more into just two of my favorite examples to this to show you what I mean by conviction and actually having a low time preference being extremely beneficial in the real markets. So, I'm going to give you two examples, one within Meta and one within Bitcoin. So, if we look through the 2022 crash, a lot of assets had a brutal year during the 2022 crash because we were essentially coming off of a ridiculous amount of money printing after the recession of 2020, which created this artificially inflated or bull market, sorry, that ended up leading to a bull market or sorry, a bear market in a lot of other assets. And some assets were a lot more amplified than others. And Meta is a perfect example of mine that I always like going back to because I remember vividly during this time period, this is when Facebook rebranded into Meta. And if you're an individual that just bought Meta or Facebook and you had no idea what was going on, you would see what was going on in the market and what the rebranding was doing, and you would be trying to sell immediately because you would not have an understanding of the fundamentals of the business model of Meta. And you would have just be basically blind and reading headlines. So all you would be seeing when you wake up is you wouldn't see the same influencers bull posting. You would be seeing a lot of news articles like this saying Facebook suffers $230 billion wipeout in biggest one day US stock plunge. You would see constant articles like this saying the massive wipeout of what's going on. And this has went on for this whole time period. During this crash, you would see articles like this every day: 80 billion wiped from value of Facebook and Instagram owner Meta. And when you just read through these articles, they basically just go into things like this, where creates this bearish sentiment, such as amid growing competition from TikTok and other experimental bets would begin paying off that are not paying off. Like, you would be reading these big headlines that basically miss the whole underlying fundamentals of the company. Now, if you had conviction and a low time preference, you would recognize that this is just noise and you would be able to tune it out. And this would allow you to dollar cost average through this period. Now, of course, no one is able to time these bottoms, but if you have a low time preference and conviction, you would be buying through these red candles. And eventually, when the selling gets exhausted over a long period of time because you have a low time preference, you begin to reap the rewards. All the way from the bottom to the peak, you're up 823%. Even now, 657%. Even if you dollar cost averaged and you bought somewhere in the middle of the crash, still up a modest 260%, 350% at the all time high on your positions. And what I'm basically saying is, I'm not saying look at Meta for its next crash and buy it. I'm trying to just use this as an example that if you were an investor that understood the fundamentals, did the research, developed a low time preference, you would be able to reap the rewards, as opposed to someone that just sees these green candles and thinks to themselves, this is the best thing to buy now because it just keeps going up. You'll probably just be underwater in the short term, and you might just be panicking. You probably won't dollar cost average because you have no understanding of the asset. So, to me, this is a perfect example of when having a low time preference and conviction in an asset can truly give you the rewards over a long period of time. And this is why having a low time preference is important, because this bottom was at the end of 2022 and this peak occurred in 2025. So you had to be holding for, 2, 3 years to get these green candles. So that's why it's very important to actually have a longer time horizon and not try to make money quick. And then, secondly, before I wrap this up, I do want to go over another example, which is Bitcoin, because it had a similar thing during that 2022 time period where it went on an absolutely terrible bear market. Again, 77% down from the top to the bottom. And again, if you didn't have conviction and actually understand what Bitcoin is, you would be looking at situations like this, like the FTX crypto exchange collapse, which was one of the world's largest and most trusted cryptocurrency exchanges, valued at over $32 billion at its peak, basically rapidly collapsing, causing these insane liquidations, and ultimately what started um, making people capitulate, and which led into these beliefs, such as this article here. After FTX, is crypto as an investment dead? Several recent failures in the market have eroded investor trust. So, this is just another perfect example where if you don't have any understanding or conviction in the asset and you're not allowing yourself to have a low time preference and hold through these crashes, you would more than likely sell for sure, or you wouldn't be buying at all. Because the reality is, if you have no understanding of this, and you are down a ridiculous amount, you are not going to be buying back in, or you will just sell and cut the losses. But again, we can see the exact same situation play out again. If you reaped the rewards today, it's because you made money and you purchased the asset through the bear market, which allowed you to be up 500% today or up 700% at its peaks. And again, even if you were buying halfway through the bear markets, you were still up 380% and 260%. So, again, the same principle applies here. Having the conviction and the low time preference can really allow you to reap the rewards as an investor. And not only that, it allows you to sleep better at night because once you understand what you're doing with your money, you will not panic when you see your portfolio dropping 70, 80% over a period of time because you understand the market psychology and understand that this is what needs to happen in order to actually reap the rewards, not buying in through the green candles and just temporarily losing because the reality is this is where you should be buying, not at the peaks. So, just to conclude everything, this is the reason why I say you need to be treating your portfolio the same as you treat a steak in a supermarket, and why you need to be praying for the red candles and not be praying for the green candles. So, without further ado, I hope that you enjoyed this video today, and I hope I was able to provide some value in how you view investing going forward. And to maybe the next time that we do have a bear market or whatever asset you invest in does go through a crash, you can maybe remember these words of conviction and low time preference and understand that this is just part of being an investor. And with time and patience and gratitude, you will be able to reap the rewards. So, thank you again for watching. If you have not yet already, please like and subscribe to this channel. And give me a comment on what you think of this video. Do you agree that the conviction and low time preference is the way to go? Or do you believe that we should be doing something else? I would love to hear from that. Either way, I'll see you guys next time. Take care.